All right, today we are going to look at the top 10 retail stocks, meaning stocks held by you and I, the little guys. There are some monster surprises of stocks that have fallen a lot in these rankings, and I honestly don't know why, because they're awesome stocks and they were beaten down, but yet they fell. And there are some new stocks on this list too. So let's go over each individual stock here and kind of go over the goods and bads of each from a long-term investor's perspective. Just make sure you like the video if you like getting the truth without the hype. Just keep in mind, these are not my stock picks, guys. These are the top stocks that retail investors have been investing in for the past month there. This is not my list. This is not Luke's list of stocks he would invest in. This is what we actually bought as retail investors over the past month. So let's jump into the list here. So at number 10, we start off with a bang with Meta. This is a huge fall for the stock, and to me, it didn't make any sense because it fell over the past month. That was the time to be buying Meta. We were buying it in the previous month when we were well over $500. I understand it's popped right back up around that level now, but we got a nice little drop down in that stock after earnings, after Wall Street decided to beat it down. And I guess we decided we weren't interested in the beatdown. Now, those of you guys that follow this channel, and obviously you guys in my group there, you guys saw that I immediately, after it got beat down, I added it to my watch list, and we've been able to add a couple batches of shares at those lower prices there because of the beatdown that it got. But apparently retail wasn't interested in it, so it fell all the way to 10 on the list here. But you guys know, for me, this is an absolute pump it stock. I love the stock both in the short term and in the long term. That's why I threw it back on my watch list as a DCA there. And of course, I'll be interested to add more shares if Wall Street decides to get dumb again in the future. So stock number 9 is Disney. Another stock that actually fell in the rankings, but at least this one I can understand. They have business problems. They've had business problems for a while now. They're not going to get solved tomorrow or even this year. There's a lot of things that they've got to clean up and do in regards to Disney stock. They've made some small changes. They've made some minor cleanup, but there's still a lot more cleanup to go there. So this one to me is kind of a cautious pumping. Even actually, despite the bigger run up, it kind of makes me even more cautious about it just because it had such a nice run up. You know, basically we were able to buy in the 70s just seems like a few months ago. It may have been last year, late last year, but nonetheless, it's had a nice run over the past year. And so you got to be cautious with this one here. They have business problems. That's the bottom. I can get into any of the rest of this mess. Business problems are what I care about, and they do have those, and they're trying to clean them up. So it really comes down to, do you believe Bob Iger can clean them up or not? It's kind of what you got to come down to and kind of the decision you have to make with Disney. So stock number 8 is AMC. This stock is actually back on the list after having left the list. So I'm sure this is correlated with all the GME stuff and all that other stuff like that. I'm sure that's probably where this correlation came, but it had kind of fallen out of favor. And of course, when we have any sort of excitement, you know, any sort of Wall Street bets type of run up there, it pops right back on this list here. It's usually on the list anyways, but it had fallen out there for a little bit, kind of fallen out of favor. But it's right back in favor there with retail crowd. Again, we'll see what happens here over this next month. I'll be curious to see next month's ratings to see if it stayed on there or not. And then obviously see what the stock price did too. So that way you can see, did it actually maintain? Did we actually able to make money? Were we late to the party once again and got burned? We'll wait and see with all that sort of stuff, but it's back on it. You guys know for me, it's a dump it. I don't want anything to do with any of this Wall Street bets type stuff. It's trading. And again, I'm a long-term buy and hold investor, so it's just not something that fits into my criteria there. Not saying there's not a trade there. It's just not something that I do as a long-term buy and hold investor. So for me, it's a complete dump it. So stock number 7 is GameStop. Again, this one's not surprising given all the Roaring Kitty stuff and everything else that came on. Yeah, I know, I finally got the name right. I looked it up there in my group. A few folks there kind of helped me understand the specifics with that. But nonetheless, you know, GameStop, same exact thing. It's the same exact thing as AMC. It's a terrible business. There's nothing positive there. Earnings are going down. Everything's going down. It's strictly a you know, Wall Street bets, meme stock type of trade of some sort there. And again, I you know, don't engage in regular swing trading or day trading, much less this sort of meme stock type trading. So for me, it's a dump it. I have no interest in this style of trading. Fun to watch, fun to see. But nonetheless, I think you're playing with sharks there. And unfortunately, the rules are set up against us. And it's just kind of one of those deals. Some people are going to make money, but a lot of folks are going to get burned. So for that, you know, 2%, 5%, 10%, whatever the number is that make a lot of money, the other 90% are going to get absolutely crushed on the retail side there. So kind of is what it is, something I stay far, far away from. Number 6 is Microsoft. All right, back to normal here with a great stock. I don't own it personally because I chose to go with Apple a long time ago instead. For me, that was the right choice. It's paid off in terms of return over the time frame there, but I have nothing bad to say about Microsoft there. I know the valuation's getting a little bit rich there, but they're working on so many things that are absolutely going to pay off huge in the future. I have no problems with adding that sort of stock. Obviously, I can't determine where it's going to go in the short term, but long term, It's a great stock, one that I would absolutely, put a pump it rating on because it's Microsoft, guys. They're going to be around here. They're going to be around 10 years from now and be one of the leaders 10 years from now. So I don't have any issues with this stock at all. That's us as retail investors buying a great stock. Number 5 is Ford. Again, guys, we talk about this every time we see Ford on this list. I don't understand why we like this stock, why we continue to buy this stock. Again, maybe it's just a trade. Maybe there's some sort of a Wall Street bets thing out there that just isn't as popular as a lot of the other Wall Street bets. I have no idea what's going on with this one, but it seems like, at least according to the numbers, we don't want anything to do with a stock like Palantir, but yet we're willing to throw a bunch of money at Ford of all stocks. So I don't know what the play is there, guys. For me, it's a dump it. I want nothing to do with legacy auto. They are all just covered with albatrosses everywhere, all over their financials. I don't know. I just don't see Ford or any of the rest of them as the future of the auto industry. They need significant shakeup before I would even consider those stocks. And by considerable shakeup, I mean some sort of a bankruptcy where they're able to get rid of some of the albatrosses that are all around them and then come back into where they can actually churn a profit on a vehicle, with the exception of a few models. They can't really do it. So want nothing to do with this stock. I don't understand what we're thinking with this one, but hey, that's all right. Not my list. It's on there. But for me, it's a dump it. I want nothing to do with it. Number 4 is Nvidia. Well, this one I completely understand. I can't say Nvidia is not crushing it. Earnings call after earnings call after earnings call after earnings call. And yes, I can keep going with after earnings call because they continue to do it. So they have a long runway ahead of them. Now, I don't know where they're going to be 2 years, 3 years, 5 years from now, but at least over the next year, when you have the biggest of the big dogs continuing to buy what you produce and continue to basically line up for it and are basically willing to pay whatever you have for it, I understand somebody's eventually going to catch up. I understand that as that happens, obviously everything will come down in regards to the demand and the margins and everything else like that. But for now, it's still a great company. They've been a great company for a long time here, and they do have a long runway. And where that ends in the future, I have no idea. But I definitely don't think it's going to be next quarter or anything of that nature. So for me, it's definitely a pump it, definitely a great stock to own there. It's outside of my circle of competency. I don't understand chip sector at all, so I stay away from all of them, regardless of which stock it is. But I completely see from a business standpoint, it's a great business there. So stock number 3 is Amazon. All right, I actually covered this stock a few days ago. You can click the video right up here for it. If you want specifics in regards to what Wall Street thinks about Amazon, then kind of let you know the secret sauce on Amazon there. But for me, Amazon's a great business. Owned it for a very, very long time. Obviously, I use it all the time. I think most people do use it all the time. And I believe they have a very, very long runway ahead. And I think we're doing one of those growth periods in terms of earnings for Amazon before they do their next little, hey, we're going to spend every dime we can for a couple years building out infrastructure and a lot of other things like that before the next kind of move up per se. That's kind of how the stock moves. So absolutely a pump it for me. I love Amazon, love the stock, love everything about it. And, good on us as a retail community there, getting around a great stock. Stock number 2 is Apple. You guys know it is my favorite stock of all time. There has been many, many times over the years where Apple's demise has been predicted and it just hasn't happened. That ecosystem is so strong. I don't know what's going to break it. I guess something in the future will eventually break it, but for right now, there's nothing on the horizon that's going to break that sort of stuff up. That doesn't mean earnings won't slow. That doesn't mean growth won't slow or anything else like that. But it is still a great, solid stock that not only retail obviously loves to buy, but large institutional investors as well love to hold Apple as well, which is why it's held so steady through all the chaos over the past couple of years there. It's just kind of been a rock there. So I don't know if there's a lot of massive upside, the 10x opportunity or anything else like that with Apple, but it is a great stock to own. And of course, I love owning it as well. So for me, it's a pump it, but just understand it's not a high growth stock or anything else like that. It's definitely a very, very mature business. And stock number 1 is Tesla. Well, for the second month in a row, Tesla has been number 1 for us among retail investors. And hey, at least we're not up at $400 per share and having it be number 1. At least we're down here well under $200, showing up at number 1 there in regards to buying this particular stock. Shows you kind of the strength in the retail community in general. And maybe we're finally getting that sort of thing right. Not listening to the pumpers nearly as much as we are actually looking at valuation and other things like that. And of course, right now, the valuation isn't crazy cheap because the margins and everything else continue to go down for Tesla, but I do believe we're starting to see the bottoming of that, which is good news for us as shareholders long term. Now, in the short term, Wall Street's going to do what they want to do. So maybe we get shares a lot cheaper than this. I was very, very happy. I'm glad I added at 142. Last time we got down right before there with all the noise around the last earnings call and all that other good stuff like that. So Wall Street wants to get dumb again. I'm happy to add. So for me, it's definitely a pump it there. Just you got to be cautious and you got to understand the Tesla train per se, or the Tesla roller coaster. It's going to go way up, way down, emotions all over the place. We got big things coming here soon with the shareholder vote on Elon's compensation package and all the noise around that and all the noise around robotaxi. You just got to understand that's part of the thing here. It's going to be an up and down journey, an emotional ride. And you got to understand that when you buy this stock. But if you want to see my complete watch list with my top 10 stocks, or actually top 16 or so that I'm looking to buy, complete with price targets and everything else, make sure you check out the pinned comment for a membership to my group where you get access to that. All my buy and sell alerts in real time. You get access to the best 6, 7, and 8-figure Discord out there, 5 courses for free coaching to help you out even further in your investing journey. Be a part of the $250 portfolio challenge. Take advantage of our super investors who are also taking that challenge with us, where we're building on a portfolio from 0 to 100,000 and beyond, and so much more, guys. Just check out the pinned comment down there and see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market, and click here to see my exact plan for this market. Thanks for watching, and we'll see you in the next one.